Our investment philosophy starts with a strategic asset allocation based off each individual client. This is determined by a thorough examination of the client's unique situation and risk tolerance through multiple meetings and the completion of a risk tolerance questionnaire. This will be the foundation of the investment policy statement developed by the client and advisor and will represent our roadmap for the management of their investment assets. We use a broad array of asset classes to spread out risk exposure. These include domestic equities and bonds, international equities and bonds, cash, and an alternative asset class that includes such investments as commodities, real estate, hedge funds, private equity, and tactical trading. To complete the asset allocation, we use a combination of individual securities, including stocks, bonds, ETFs, mutual funds, and in some cases, private placements. Managers and individual securities are researched and screened using a fundamental and a technical analysis, online subscription tools, and our global investment solutions team out of Hightower in New York and Chicago. We build a list of approved fund managers that we closely monitor on a daily and monthly basis, and more formally on a quarterly basis, where we do a deep dive on each manager to confirm their retention or exclusion from our highlight list. Ongoing investment decisions for the client represent our tactical overlay on the management of the portfolio allocation. Based on our 70 years of combined investment experience, our team has developed a level of intuition that is the foundation of our investment process. We come at each scenario with both a top-down macro view and a bottom-up fundamental view to make sure we capture all the relevant market data. This allows us to tactically manage the portfolio given current economic and political situations, over or underweighting each asset class to capture opportunities or to reduce risk. This is done within the parameters set in the strategic allocation and investment policy statement. Part of the investment decision also centers around tax efficiency, which includes asset placement and tax loss harvesting. Asset placement is a process of placing certain types of investments or asset classes in taxable versus non-taxable accounts, like IRAs or 401ks. Non-tax efficient investments that produce short-term capital gains or interest that is taxable as ordinary income would be well positioned in a non-taxable account, for example. Tax loss harvesting is also a tool we use to take losses in portfolios while keeping exposure to the asset class, while potentially reducing the client's tax liability. On an ongoing basis, we meet with clients annually, semi-annually, or quarterly, depending on the client's need. During these meetings, we review and get updates on the client's individual situation to make sure we have a full picture of their financial and personal status. We'll also review the equity and bond markets, the client's investments, and their current allocation mix versus their target allocation. Performance is also reviewed with the client, comparing the portfolio returns versus a relative benchmark determined by their target allocation. We then drill down and look at the net investment and allocation over time for the client's portfolio. And finally, the allocation versus the benchmark for each asset class. These reports are reviewed at client meetings, but are also available on demand through our client portal.